Hello everyone, thank you for joining us today and welcome to this presentation of the importance of confirming your trades. Now this promises to be a very informative and educational webinar. In fact, let me start out by showing you just a couple of slides here. Has this ever happened to you before? As we see, there are two signals here to go short MCO. This was just this past month or so, in the beginning of February and at the end of February. Now, as you can see, on the 28th of January, we had a sell signal that was generated by one of our strategies that performed very well and went in the correct direction. But then again, another signal was generated about a month later in the same equity, and as you can see, this one did not work out very well. So today I'm going to be sharing with you a very simple but powerful tool that would have kept you in the first trade because it confirmed it, but did not confirm the second signal, so that you would have kept out entirely out of that losing trade. So you're going to see the real importance of confirming all of your trading signals. Now, I'd like to welcome you once again. My name is Primo. I am the president and founder of Specialist Trading. And as you can see right off the bat, we are an educational company. It's our goal to educate traders with all the tips and techniques I have accumulated in my nearly 40 years of trading, because in my 40 years I found out that the reason why most traders fail is because you're basically giving your power away. What you're doing is most traders rely on outside sources, either some technique or some system or some convoluted indicator or some trading guru on some webinar telling you what to buy, what to sell, what the perfect time frame is. And in my opinion, this is a recipe for disaster. I know this firsthand because this is the way I used to trade when I first started trading roughly about 39 years ago, and it didn't help me at all. In fact, the first 2 years of my trading, I really suffered tremendously. I began my career on the trading floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. Specialists were those market makers. If you ever look at the old pictures of the trading floor where all the paper on the floor and people yelling and screaming, the specialists were those traders behind those large wooden booths that made markets in roughly about 50 stocks. So if you wanted to buy or sell a particular equity, you had to go to the person who was in charge or who specialized in that equity. So that's what I did, excuse me, for a total of 9 years. I traded through the crash of 1987. I traded through the bull market that followed after that. I've traded quiet markets, straight down markets, straight up markets, ranging markets. I've traded just about every technique and system and strategy around. So I know what works in terms of consistency, and I know what doesn't work. And trust me, I know this from firsthand experience, because my first 2 years of trading, I traded just about the way everyone else does. You know, I was relying on outside sources to tell me what to do, how to trade. We didn't have chat rooms or trading rooms then, or webinars, but we had a lot of news services and we had a lot of subscription services. And I belonged to each and every one of them. I had 20 or so indicators on my screen. I was following every bit of news announcement that came out, whether it was earnings or jobless claims or economic reports. And trust me, nothing worked. Everything that was supposed to work didn't work. It wasn't until my mentors took me aside and said, Steve, you have to learn to rely on sound fundamental education that has stood the test of time and make your own trading decisions instead of relying on someone else to do them for you. And then you will get onto that road to consistency. So this is what turned my trading around, and this is the same philosophy we try to instill in all of our students and members. Our courses are taught in over 100 countries around the world, as well as every state within the United States. Anywhere from hedge fund managers to beginning traders use our techniques and methods. Okay, so hopefully we can turn your trading around as well. Excuse me. Now I'm going to show you this great technique for confirming your trades. But before we begin, we are required to show you this. Please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this confirmation technique. But please remember that we can in no way guarantee that any of the results I am about to share with you will be repeated in the future. So as you are taking a brief moment to view the required disclaimer, I would also like to take the second to invite each and every one of you to follow us on Twitter if you haven't done so already. You may want to copy down our handle there. It's at SPC LSTTRADG. I post information on a daily basis. I post daily financial wisdom as well as signals that our strategies have currently generated. And these are not just signals in the stock market. There are also signals in the Forex markets as well as the futures markets. So anything that our strategies may have generated a signal, I will post a little bit after the fact, though, not while they're being generated, because that's only privy to our members of Specialist Trading. For example, a couple of days ago, just about 3 or 4 days ago, I posted one of our strategies generated a buy signal in the Australian dollar for all you Forex traders, and that has gone up over 300 pips in the last 3 or 4 days. That's using the same technique I'm going to be sharing with you today. So it's a lot of great free information, but it is rather limited. So if you would like to get more information, my sister site, which is Proprietary Strategies, has put together a Facebook page. So you can simply log on there and go to proprietarystrategies.com. There's a lot more detailed information about what we do at Specialist Trading, as well as Proprietary Strategies, and about myself included. A lot of detailed webinars and presentations and videos, so you can find out a lot more about what we have to offer. Okay? Now, as I stated, we are an educational company. Even though our strategies, generate signals, and we post some of these signals from time to time, it's not our goal to just simply force feed you signals. We just don't want to say, okay, well, here's a buy in the E-mini S&P, or here's a sell in Apple. Take those without having any knowledge or reason why, because, as I stated, this goes entirely against our philosophy. What we're trying to do is teach you how to be in charge of your own decision-making process. We want you to empower your trading. So as you see here, my goal is to teach you, not to trade for you the way so many other sites do, but to teach you how to trade with a specialist edge. So this is the same edge that turned my trading around nearly 40 years ago. This is the same edge I try to instill in all of our students at Specialist Trading. Now, I'd like to start out by sharing with you what I learned trading on the floor of the exchange. And this, was nearly 40 years ago, but the same truths hold and the same facts are still true today. Fact number one, 80% of all traders lose money. Okay, and when I say lose money, I don't mean you go into some small drawdown or some slump in your trading. This means that 80% of all traders will ultimately fail. In other words, give away all of their nest egg. Okay, you will lose everything you saved up. Now, either you'll be completely wiped out and won't trade again ever, or you'll have to save up again and try to get some more money to be able to trade. That's roughly 80% of all traders. The second fact is that 15% of all traders will break even. Okay, now a lot of people say we're only going to break even. Well, that's really not very bad, actually, because if you're breaking even, at least you're not losing any money. But you're putting in a lot of hard work, a lot of time and effort just to basically tread water. So that's only going to be about 15% of you. And lastly, this means that only 5% of all traders will be consistently profitable. So if there's 100 people, let's just say, listening today, and actually there are more than that, but just to keep things simple, 100 people listening in today's presentation, only 5 of you will be consistently profitable. Okay, those are the odds and statistics that go back years. These were true 40 years ago when I first started. I'm sure they were true, well before that as well. As you want to see, if you want to see what that looks like on a visual scale here, this is a pie chart. This large section here in red represents the percentage of traders that will ultimately fail. That small slice there in blue means the traders that will break even, and that very small slice in green, kind of sliver there, actually represents the percentage of traders who will consistently be profitable. So we have to ask ourselves, how is it possible that the majority of trading profits are captured by such a small percentage of traders? You see, it's my philosophy that there is enough for everyone to go around. I know everyone loves to look at the markets as a zero-sum game where someone wins, someone loses at the same time. That's silly. Even though that may be true, it's a silly way to view the markets, in my opinion. That's almost comparable to saying, well, for everyone taking in a breath of air, someone is losing a breath of air. It's silly. There is so much oxygen to go around. Why would you even think that way? It's the same way with the markets. There is so much profitability. There's so many opportunities and chances to be profitable. Why would you look at the markets that way? The markets are just like a never-ending ocean with enough water for everyone to come and take as much as they want out of it. But why are only such a small amount able to do that? Well, in my nearly 40 years of trading, I think it's because these traders have either one or two edges, even better, at their disposal that they have learned through the years that are consistent. Remember, we're not trying to teach you, or in no way do we promote get-rich-quick schemes where, I'm going to say we have the perfect system here that generates thousands of profits a month. We don't believe in that. We're looking more for consistency. So these traders have something that is consistent that the rest of the traders don't. Most traders, myself included, when I first started, were looking for that, that home run. And we would find some type of technique or method that would produce these large gains. The only trouble is that every once in a while when you'd have a loser, you'd most likely give everything back. Does that sound familiar to anyone? Because I know that that's the way my trading was, and I can almost say that most traders go through the same scenario. But when you find a technique that is consistent, it's more of a two-step forward, one-step back approach. So this is what we're looking for, because this and only this is what will sustain you. This is what will allow you to be trading not just 2 or 3 years, but 20, 30, or 40 years. So here's an edge there that I'd like to talk about today, and this is our strategy number 4. This was something I was introduced to on the floor of the exchange, and I've been using it in some form or fashion for the last nearly 40 years in my own personal trading. Let's talk about some of the highlights of this particular method. Firstly, it's a trend following strategy, okay? So we're looking to catch a trend in some particular fashion. Its intensity level, if the most intense of all strategies is 1 and the most or the least intense is 3, where it's just very boring, you can simply walk away from the screen, it's right in the middle, a comfortable 2 intensity level. The entries are based on a specific pattern recognition. I'm sorry, I can't give away what this pattern recognition is because it wouldn't be fair to the people that have purchased the strategy already. But guess what? I am going to give you 2 of the 5 rules today in just a few minutes. Now, this strategy, the beauty of it is that it can be transferred onto any time frame, any market, and in any direction. So how many of you ever purchased strategies or learned a technique where after a while the people say, well, this is only good on the British pound currency pair, and it can only be good used when going long on tick charts. It's too detailed. The measurement of a good strategy or technique is when it works in any market, any time frame, and in any direction. Now, if you become a course member of strategy number 4, you will receive free automatic signal alerts. These are a small add-on that generates a buy and sell arrows. But remember, these are for educational purposes only. We do not want you to rely on them because that would be going against our own philosophy. Pretty soon people would be applying them as a crutch. They wouldn't have any reason why they were buying. They would just say, well, the arrow says green, so I guess I should buy here. We only use these so that you can check your work, but ultimately you will be able to find and spot a strategy number 4 signal on your own once you become a member of our course. Remember, our edge at specialist trading with all of our techniques and all of our courses is consistency. I'm not going to sit here and tell you that every trade works. We will have small losses from time to time. But the beauty of a consistent method is that it will oftentimes make back the loss rather quickly. Once again, we want to get back into that 2-step forward, 1-step back approach where you have a couple of winners, small loss, then 2 more winners, another small loss, so that over time you have a very nice profit or a very nice gain. Okay? All right, now let's go into this. As I stated, I'm going to be sharing with you 2 of the actual rules of this particular strategy and show you how they jump into confirming and how we go into this other technique for confirming all of the signals. But before we go in, I just want to make sure that we understand this is an educational webinar today. So since this is a classroom, please, if you have any questions, kindly wait till the end of the presentation. I know a lot of you have gone to my webinars before, and you know I don't like to take any questions until the end. So if you have a question, it won't even matter if you write it in the question and answer box, because I'm not even going to open up that box till the end of the presentation, roughly in about 20 minutes from now. So just wait and then ask the questions then, and we'll go over each and every one of them, okay? The only question I will answer is this being recorded? Yes, it is. So if you're having technical difficulties or if you have to leave early, we are recording this. Pro Trader Strategies, once again, my sister site, has links to all of this, so kindly go ask them afterwards for a link, and they will send you a link to this recording. All right, so let's begin with strategy number 4. Let's talk about rule number 1. Very simple. I've talked about this before. Buy signals can only be entered above the 50-period moving average. All right, so I don't care what strategy you're trading. If you get a buy signal and it is below the 50-period moving average, you've just taken out the odds for consistency in your favor, all right? Because you're out of sync with the overall trend. Now, conversely, sell signals can only be entered below the 50-period moving average. Why? Because if price is below the 50-period moving average, the overall trend is down. So we want to be swimming with the current at our back. So for this particular strategy, we will never be buying below the 50-period moving average, and we will never be selling above. By doing so, we have just put the odds in our favor for having more consistency in our trades. Remember, it's not about hitting home runs. Every once in a while, you will find a great short above the 50 period and a great buy below the 50 period. But that doesn't matter. We're not trying to hit home runs because we know we can lose it or give it back just as easily. We're trying to be consistent. Over time, it's a numbers game. And if you only buy above the 50 and only sell below the 50, over time you will achieve that consistency that I know you're all searching for. Let's look at this older chart of ATVI, okay? Now right here, this is a perfect example of how well this concept works. Now, even though it looks as if we're just basically in a range here in the beginning of this chart, where is price in relation to the 50-period moving average? Well, price is above, so the overall trend is up. And as you can see, the odds are in your favor if you are looking to go long, because things like this may happen. So you don't want to be short if you're above the 50. Conversely, if we look at this older chart in KSS, we were originally above the 50, but then we crossed over so that the majority of bars were now below. Even if we're touching or hugging that top 50-period moving average line, we have closed below and our entry will be below. So it makes no sense to buy below the 50 period because the odds are in your favor. Price will go down the way this did. Now, obviously, some news came out where the stock gapped down tremendously. We didn't know that. No one called us up the night before and said, have all your members go short the stock because we're going to make an announcement where the stock's going to gap down a number of points. No, the only thing our members know is that, well, if price is below the 50, we're not going to be a buyer because over time, we will stay out of trouble, just as you would have stayed out of trouble here. Now, remember, this does not matter if you're trading a 5-minute chart, a daily chart, or a weekly chart. It does not matter if you're trading a tick chart. It does not matter if you're trading currency pairs, the futures, or stocks. This works in all markets, in all time frames, in all directions. So that was rule number 1. Let's go to rule number 2 now. Now that we know what side of the market to be on, we are going to look for a bar that closes in the top or bottom 25% of its range. All right, so people always have trouble with this concept. It's extremely simple, and after a little practice, you'll be able to figure it out very easily yourself. But if we look at a bar here, and this is specifically made generic, I specifically took out the time frame in the market because it doesn't matter. It absolutely makes no difference. But what we want to do here, if this were a tick chart, a 5-minute bar, or a monthly bar, is you just want to simply divide it by 4 separate but equal parts. And if you close in the top 25%, that top quarter, well, and if you are also above the 50-period moving average, that is the market telling you that most likely it's going to continue to go higher. So that's an indication to buy. It's not simply a buy, signal telling you to go long, but it is one of the 5 rules of strategy number 4, and it's telling you this is a good spot to buy because the market, not some guy on TV or not some guy on a webinar or not somebody in a chat room, but the market is telling you, guess what? I'm most likely going to be going higher. Now, conversely, if you see a bar that closes at the low like this, it does not matter if this is a candlestick. It does not, people get too caught up in candlesticks and because of the wick and the range. The range means in its truest form, the extreme high, as we see right here, and the extreme low. Now in this case, this is an open high-low close bar, but this could be easily a candlestick bar. And the extreme high would be the top of the wick, and the extreme low would be the bottom of the wick. Now we happen to close at the bottom, so this is easy to see, but you would do the same thing regardless of whatever type of candle you're using. You simply divide from the very top of the wick to the very bottom of the wick, or the top of the bar to the bottom of the bar, divide by 4 separate equal parts, and if you close in the bottom quarter, and you are below the 50-period moving average line, not some guy in a chat room, but the market is giving you a tremendous clue. It's telling you that's an indication to sell. Most likely we're going lower. Okay? Remember, we want to take all of our cues, all of our setups from the source. What is the source? It's the chart we're looking at in front of us. It's not some guy on TV. It's not some indicator. It's the market. If you learn how to listen to the market, it will most likely tell you what it's going to do, I would say about 70, 80% of the time. Okay? So learn to listen to the market and you'll get onto that road to consistency. I stopped looking at news. I stopped listening to other traders. I stopped having tons and tons of indicators. At most, we only use maybe 1 or 2 in our strategies. I stopped looking at all that stuff, and that's when my trading started to become consistent. So even though I was making markets in roughly 50 stocks, I never looked at their, if anyone needed to know, conventional wisdom needed to know what their earnings were, it's supposed to be the specialist, right? I never looked at earnings. I could care less. And I was on the floor for a good 16 years. So if a specialist, the person who's making a market, didn't care about what the earnings were or what was going on with the jobless claims or the money supply, why do you think you sitting in your home office or sitting in an office should be just as interested? It absolutely makes no difference, okay? All right, so let's look at some strategy for examples with these 2 rules I just shared with you. Remember, I can't give you all the rules. That would not be fair to the people who have spent very good money on purchasing the strategy and becoming a member of my course. But what I can do is show you some examples with these 2 rules. And once again, I know that some people may be asking questions if you happen to come in late. Trust me, I'm not even going to look at any questions till the presentation is over. So it makes no use to ask any questions because I won't be answering them until about another 20 minutes or so, okay? All right, let's go on to some examples, and let's look at XEL. Now, first of all, just off site, someone would say, well, Steve, there's actually no trend here. I've always been taught, the course I took that cost me $5,000 said we always stay out of ranging markets because that's where you get hurt and that's where you get whipsawed. And I can tell by here, according to what I've always learned, that this is a ranging market. There's no trend, so I don't want to be involved in this, okay? This is the way most traders trade, not at specialist trading. The first thing we do, regardless of what time frame and regardless of what market, is we add a 50-period moving average. All right, and we ask ourselves, where is the majority of price in relation to that? Majority of price is above. So are we in a baseless market? Are we just going in a ranging market? No, the overall trend is up according to our rules. All right, so we're going to look to buy. If the overall trend is up, we're looking for buy setups. And guess what? We have a bar that closed in the top 25% of its range. Now, I know there are other bars here in this scenario that close in the top 25% of their range, but they did not meet all the other requirements of the strategy, which I can't divulge at this time. But this one did, all right? So our automatic software, which comes when you become a member of the course, generated a buy signal on this particular bar. And look what happened. Stock went up 4 points in 2 weeks, okay? See how simple it is when you're only focusing on one thing, that's the market. Trading is really a lot simpler when you leave out all this outside what my mentors called noise. That noise is listening to other traders in chat rooms, that noise is having tons of indicators, and that noise is going in chat rooms and trading rooms, all things which we don't promote or suggest at specialist trading. How about NKE? Okay, as we see here, we're below the 50-period moving average. And then we come up to test it. We come up to touch it right here, and this bar actually closes on top of it. But the next bar goes above and then closes below. So it's safe to say, though, that the majority bars are below the 50, and they've closed below the 50. And at the same time, we have a bar here that closes in the bottom quarter of its range. So according to the software, we have a valid signal to go short, strategy number 4. Okay, we're below the 50 period, even though we oscillated above it, our close is below and we will be entering below. And we closed in the bottom 25% here. So the market, the stock, not some outside source, but the stock is telling us, it's giving us clues that most likely it wants to go lower. So look what happened, 8 points in 1 week, okay? These were all actual signals that the members of specialist trading were privy to in the strategy number 4 course. WEC, this is a little bit more advanced because we were originally below the 50 period. We oscillated above it, below it, and then we all of a sudden start to have the majority bars above the 50. So even if it just goes back 3 to 5 bars, that's enough that we need to know that we are in an overall uptrend, okay? And we close in the top of the range in this bar. So all the other requirements of the strategy are met, so the software automatically generates a buy setup. And the stock goes up 7 points in 1 month. Lastly, STJ, St. Joe, we are below the 50-period moving average. So the overall trend is down, even though we're only looking back a couple of weeks. That's all we need to know. All right, we need to just look at roughly 3 to 5 bars to tell us. Now, just because the overall trend is down doesn't mean we're going to sell at the market. It means that we are now going to start looking for sell setups. And here's our first setup right here. We close in the bottom 25% of its range. So that's rule number 2 is met. Now rules 3, 4, and 5 were also met. Once again, I'm sorry I can't divulge them, but the software generated a sell signal. Okay? Not some earnings report or not some economic report, but the market told us it's going lower. And the stock fell 12 points in 1 month. Now, a lot of times people will say, boy, I missed that great trade. The beauty of strategy number 4 is that oftentimes it will generate other signals while one signal is in play still. So you could have taken the second signal if you missed the first one. Now, a lot of traders will say, well, Steve, I don't trade stocks on daily time frame. I intraday trade stocks. Okay, going back about 3 or 4 weeks ago, here's a 5-minute chart of IBM. All right, now, originally coming into this day, we were opening below, and then we had the first hour or two below the 50-period moving average. So the overall trend was down on a 5-minute time frame. And then once we crossed above it and had 3 or 5 closes above, well, now we are in overall uptrend. So as we see here, this was the very first sell signal generated on the very first 5 minutes of the day. So you could have gone short here and had a very nice, quick, profit off this trade. And then once price started to close above, now we're only looking for buy setups. And there were 3 buy signals generated. Each one would have been profitable. Okay? So the same concept applies. It doesn't matter if we're looking at a 5-minute chart, a daily chart, or a monthly chart. It doesn't matter what market we're looking at. Okay? Now, as I stated at the very beginning of this presentation, we are an educational company looking to capture consistency. We're not going to sit here and tell you that every trade works. Remember, strategy number 4 is extremely consistent, meaning that you will have the majority of good profitable trades in your favor, okay? But it's 2 steps forward, 1 step back. You will have small losses from time to time. As we look here, we see that we are below the 50-period moving average, okay? So this means the overall trend is down, and we have a bar that closes in its bottom 25%. So it meets all the requirements of a valid strategy number 4 sell signal. All right, none of these other bars did, but this one did. So let's say you go short and look what happens. You're met with a loss. And worse, let's say this was your very first trade and you have a loss, okay? I know it's very disheartening. You'll say to yourself, boy, this stuff doesn't work. I bought Primo's strategy and, he taught me all this stuff and it's just like all the rest. Nothing works here, okay? Or how about the first example we showed you earlier, where one trade worked fantastically. This was a strategy number 4 sell signal. And then the next one didn't work, okay? This is what usually happens to most people. They sit around, they're very scared, they're very tentative, so they don't take the first one. And then when they get the confidence that they say, boy, that really worked well, then they take the second one. And then it's usually the second one that doesn't work. And that's where they want to throw the computer through the window because they just feel, okay, this stuff is just, all smoke and mirrors. It doesn't work. Trust me, it does work. It's just a numbers game. Every once in a while, you will have small losses. So this brings us to what we talked about today. Is there a tool that filters out bad trades and confirms the good ones? So is there some way in which we confirm being in a trade? All right? And we're going to see the importance of this. Yes, there is. You've heard me talk about this before. This is the PET-D. It is probably one of our most popular and I would say most resilient tools we have at Specialist Trading. Let me share with you what it is for those of you who are unfamiliar with the PET-D. The PET-D is not a trading strategy. It's a proprietary algorithm. This is an algorithm I was introduced to almost 40 years ago on the floor. Now, at the time, we had to calculate this formula by hand. So we could only use it on end-of-day bars because it was too difficult to calculate every 5 minutes. But because of high-speed computers and programmers now, we were able to make it a color bar tool. So now we've been able to program it so that instead of having this calculation at the end of every night, you can actually have this calculating instantaneously on your charting software program. And what it does is it automatically colors the bars, either green or red. And it's a short-term trend identifier. This is why I say it's not a strategy. This is where so many of our students have difficulty because they say, well, Steve, where does the PET-D generate a buy signal? it's not a strategy. It's like saying, where does the moving average or where does the stochastic generate a buy signal? Those are just indicators. Now, this is probably one of the best trend identifiers I know of. In fact, in my nearly 40 years of trading, I haven't found anything that is as consistent and is as fine-tuned as this, the PET-D. So let me show you how it looks here. When you have a series of green bars, it's simply telling you you're in an uptrend, a short-term uptrend. So when we have the price above the 50-period moving average, we know that the overall trend is up, but the green bars are telling us that the short-term trend is also up. So we have double confirmation, okay? Now, conversely, if we have a series of red bars, it means the short-term trend is down, okay? So we can be below the 50-period moving average, and the overall trend is down. But if the bars are red, it means also that the short-term trend is down. As we see here in this chart in HRB, we see here that just looking at this at face value, someone would say, okay, yeah, it's safe to say, Steve, we're in an uptrend. So this is what most traders do. They'll see that they're in an uptrend either by looking at higher highs and higher lows, or maybe some guy in a chat room says, oh yeah, the stock's going higher, some good news is coming out and you got to buy this stock. Or the institutions are, this is a good one, the institutions are behind it, the volume is picking up, and you've got to buy this because it's going up on good volume. So this is what usually happens. Traders will jump in listening to, once again, all these outside sources, and then the minute they jump in, this is usually what happens, right? I'm sure this looks familiar to a lot of you, all right? Now, if we apply the PET-D, green bars represent an uptrend. Now, the PET-D was already coloring the bars green way down here. But look at the beauty of this. This is why we say it's a finely tuned trend identifier, because well before the stock fell out of bed, it was already giving you signals that the bars were turning red. So it was telling you that we are now in a short-term downtrend. If you're long, most likely you'll want to get out of this trade, or at least move your stop up, protect yourself a little bit more. And if you're a more aggressive trader, you can actually use this to go short. So you see how powerful this is. It works better than any trend identifier I know of. But once again, it doesn't generate buy and sell signals. It's simply telling you the short-term trend oftentimes before it even happens. So we've seen what it is. I explained to you it's a proprietary algorithm. We don't go into all the details of what it's based off of. I can simply tell you generically it's based off of momentum, but we're keeping it in-house at this time because there's a lot of interest to lease this out to hedge funds and to go into a leasing program. So we're just keeping this in-house. All you need to know is the color of the bars. But I think probably the best use, the best way to apply this is as a signal confirmation tool. So what this means is, regardless of what strategy you're trading, you can use the PET-D to confirm. Remember, we talked about confirming your trades. So you can use this to tell you whether it's okay to take the trade or not. And in my nearly 40 years of trading, I have found that this works tremendously with strategy number 4. In fact, that's probably one of our best packages to date. It's combining strategy number 4 with the PET-D. So here's how it works. We're only going to take strategy number 4 buy signals when the PET-D colors the bar green. So in other words, when it produces a little up arrow, that bar, when it closes, has to be colored green. If it's colored red, we're not going to take the trade. Okay? It's that simple. There's no convoluted logic, not tons of indicators or news to decipher, you know, what it means. It's just, is it confirmed by the color bar? That's it. That's all we have to know. Now, conversely, if we get a sell signal, well, before we were just simply taking the strategy number 4 sell signal, which has a high level of consistency by itself, but we're increasing that even more because we're only going to take the strategy number 4 sell signals when the PET-D colors that bar red. So when you see an arrow over telling you to sell a bar, all right, that's a high level of consistency just by using strategy number 4. But now we want to see that that arrow is, that bar is also colored red. That will increase our odds for success by confirming the trade. So now we're going to see the importance of confirming your trades by simply adding the PET-D. All right, so let's look at that example I started off the presentation with. Here's the very first signal that worked well at the beginning of the chart here on the 28th of January. It was a sell signal, and as you can see, the price fell out of bed in the next couple of weeks. That was a really nice trade. And the stock basically went from 88 all the way down to 78, almost about 10 points in a week or so. Now, in order to take this trade, though, we don't want to simply take it anymore. We want to confirm it. So the sell had to be colored red. So let's add the PET D. And as you can see, even before we took the trade, the bars were already being colored red by the PET D. So well before we got a setup, the PET D was telling us we are in a downtrend. And then once we had the setup with all the requirements for the strategy to go short, well, that was our confirmation, and it worked out nicely. Now, here's where most people usually come in without the PET D. They say, okay, well, that trade worked out. I'm going to sell this one on the 24th. Now, if you don't have the PET D to confirm it, you would have simply taken this trade. But now that we see the PET D is applied, it should be red, right? In order to sell, that bar must be colored red. And what color is it? It's green. So the PET D is telling us that even though the overall trend is down, we are below the 50-period moving average, the short-term trend is up. So those two are not in sync. So we want them to be in sync with each other, so we're not going to take the trade. We're going to negate this, and we would have not lost anything because the trade was never confirmed. See how simple this is. There's no news to decipher. There's no chat room to listen to the guys, what they're doing in there, what they think about MCO. You just have to listen to the market because the PET D simply is translating what the market wants to do. It's not coming up with its own idea. It's a translator. Let's look at MKC here. Once again, two signals. The first signal worked out rather nicely. Okay, you could have gone short roughly about 85 and the stock dropped 5 points in the next week. But now we're hit with another signal, but this time it's to go long. So how do we know this one's going to work out? Well, we add the PET D. In order to go short the very first trade, it needed to be colored red. And as we see here, even though the bar before it was colored green, it doesn't matter. All we want is that the signal bar, the bar with the arrow, is in sync with the confirmation, and it was. A sell signal needed to be colored red, and it was, and we had a nice 5-point direction in our favor. Now we have a buy signal, and the buy signals need to be colored green, which it is. So just about a month ago in MKC, a buy signal was generated, and the stock went up 6 points in 2 weeks. Okay. See, trading is really simple if we learn how to listen to the market. And all our tools do is they translate what the market wants to do. It doesn't translate what some earnings report was. It doesn't translate what's going on the other side of the world. It doesn't translate what the institutions are doing and what volume is doing. Because remember, those are all outside sources. We don't care about those things. We only care about the thing we're trading, which is the market in front of us. How about Netflix? All right, now this is a little bit more advanced trade because we are originally above. This was coming in the beginning of the year. We're above the 50 period. The overall trend is up. And then we had a rather large sell-off below, but then we kind of came screaming back. So we're oscillating above and below. But the strategy, according to all the rules and requirements, generated a sell signal. So how do we know we should take this? After all, there's a lot of movement going on here. This is an expensive stock. Maybe we trade the options on this, which, by the way, you can easily just, instead of buying or selling the stock when a strategy number 4 signal is generated, you can just buy directional calls or directional puts. It really doesn't matter. Many of our students do that. So you could have done either with this particular one, but you're a little bit frightened to jump in. Well, if you want that added assurance, all you have to do is confirm the trade with the PET D. Remember, all sell signals need to be confirmed red. So let's apply the PET D, and guess what? It's red. Even though the bar before it was green, does not matter. So we're going to take the trade, and the stock fell 30 points in 1 month. Okay? Extremely simple because we're listening to the only thing we should be listening to, the market. Now, as we see here, another signal was generated later on. It was generated right here. It's another sell signal. Most people would say, boy, that first one worked out great. I'm going to sell some more on this little second pullback. All right? But in order to sell, it needs to be confirmed red. And what color is the sell signal? It's green. So we're not going to take the trade. And this was at the very end of February, just about a couple of weeks ago. So we're not going to take the trade at all. And as we can see, that would have wound up being a losing trade. How about PPG? All right, we have 3 examples here of trades. Now, the very first one worked out okay. It was a sell signal below the 50, and it was a quick sell signal. You would have been quick to take profits. At the very least, you would have broken even on this trade using our money management, but you could have made a quick 3 or 4 points in the next day or two going short PPG. And if you add the PET D, you'll see that that sell signal was confirmed. Remember, we're not concerned with what's going on before. Even though some of these bars were green, that's okay. As long as the signal, that is the setup with the arrow above it to tell you to go short, that's the one you should be looking at, its color. And it was confirmed red, so the stock went from 93 down to 89 in the next couple of days. Now later on, we are met with two signals. Here is a sell signal and a buy signal. Which one do we take? Well, it's easy now that we have the PET D. Since our sell signal is not colored red, we're not going to take that one. So we would have negated that altogether, and we would have only taken this one, the buy signal, because buys need to be colored green. So even though the majority of bars are below, we closed above the 50, and we'd be entering above the 50. So even though this is a little bit more advanced, it's okay to take this trade. And the stock gained 7 points in 1 week. How about Yum? Okay. Once again, this is a little bit more difficult, more advanced, because we're oscillating above, then back down below, then back up above, and we're kind of oscillating above and below, kind of, in a rangy market here. This is where people like to stay out of the market. But strategy number 4 generated 2 buy signals. So far, nothing has happened. So how do we know we should take these? Simple. You add the PET D. And the PET D has been coloring the bars green for the past week. So even though down here it was telling you we are now in a full-fledged short-term uptrend, even though we're oscillating above and below the overall trend. So it's okay to take these buy signals. And the stock gained 6 points in 1 week. This was just last week. Now this can also be applied to ETFs. Here are the QQQs, the ETF of the NASDAQ market. As we see here, we had a sell signal that worked out very nicely. This was in the middle to, or beginning to middle of February. The stock went from 102 down to 95, down about 7 points in a week. And why did this work out well? Because it was confirmed red. Now look at all these sell signals that were generated just the last couple of weeks, okay? 3 sell signals in a row. Not one of them has really worked out. And you would have never got caught. You know why? Because they were all colored green. So there's no reason you even would have taken any of these trades. You would not have lost money. Now, lastly, let's look at crude oil. I know a lot of people have been talking about how terrible crude oil is, and boy, they just can't believe it keeps going lower and lower. Even though it's starting to show some bounces, it still is so much further lower than it was before. Let's look at a weekly chart going back all the way back to 2014. Okay, this is roughly about 2 years ago. Now, on this weekly chart, we were originally above the 50-period moving average, but then in September, we started to oscillate below it, okay? And we had a buy signal generated where we were just below it, but we closed above. And then it was met with a sell signal. So which one should we have taken? Okay, I'm sure a lot of people would have thought, well, crude oil, you got to buy it, right? This was 2 years ago. So would you have taken this buy signal and maybe just negated the sell signal? The best thing about the PET D is it helps you make that decision. Why? Because it's translating what the market wants to do. In order for us to buy, that bar needs to be colored green. In order for us to sell, that bar needs to be colored red. So once we add the PET D, we see that the buy signal was colored red. So you never would have gone long crude oil, 2 years ago if you were an investor. So you would have negated that altogether. But the sell signal was confirmed by the PET D. It was colored red. So you would have taken that, and if you were a long-term investor, well, you all know how well you would have done being short crude oil this entire time. And as you can see here, just by crude oil being below the 50-period moving average, doesn't that give you enough proof to know how simple that rule works? If price is below the 50, regardless of what time frame, regardless of what market, the overall trend is down. You don't want to be buying. Now, the only people losing money here were the ones trying to pick a bottom in crude oil. All right? It's much better to swim with the current at your back, and the best way to do that is by applying a 50-period moving average. Now, right here, this is a weekly chart. Doesn't matter what time frame or what market. This is coming into February. This is past month. All right, so let's review strategy number 4. It's a trend following strategy. We're trying to follow the trend, and we're trying to break out of certain levels here that we look as if the market's going to move in our direction. Its intensity level is very moderate, and number 2. Now we need a total of 5 rules all to be met, and the last 3 rules are all based on pattern recognition. So those are that pattern I specifically couldn't divulge because that's reserved for actual members of the course. But as you can see, I've given you numerous examples. It works in any time frame, any market, and in any direction. Now, if you're a course member, you receive automatic buy and sell signals, those little red and green indications telling you when a setup has been generated. Okay, but remember, those are for educational tools only. There's a tremendous amount of consistency just by trading strategy number 4 by itself. But remember, you will get small losses from time to time. So how do we increase our odds even more with strategy number 4? Well, we confirm the strategy number 4 trades by adding the pet D. To review the pet D, it's a proprietary algorithm I was introduced to roughly 40 years ago on the floor of the exchange. Now we have changed it into a color bar tool, so there's nothing you have to calculate. In its most basic format is a short-term trend identifier, but the way we are applying it here is a confirmation tool. So we're confirming the signals that are generated by strategy number 4. And this is how you see the importance of confirming each and every trade, because strategy number 4 will generate a high level of consistency in its trades, but every once in a while there will be losers. So how do we increase our odds for success? How do we stay out of those losing trades and only focus on the successful ones? Well, we add the pet D, and it will give us a higher level. It won't promise that every trade will be a winner, but we will increase our odds even more. As we said, we are an educational company. We teach you all of this information in our course. I am your personal mentor, someone with nearly 40 years of experience. So we're not just giving you a system that generates buy and sell signals and we say, just, whenever a signal is generated, just blindly buy at the market or blindly sell. We don't believe in that. It goes entirely against our philosophy at Specialist Trading. What we believe in is sound education that focuses on what the market is saying, not on what an outside source is saying. In my nearly 40 years of trading, that is the only thing that will get you onto consistency. Not relying on an outside source, but relying on your own tools that you've learned that listen to the market. As we always say, once you become a part of the process, you'll start to trade with a purpose. How many of us really don't trade with a purpose? How many of us just blindly at the morning each day say, okay, well, what are they saying on TV? Okay, well, what's this blog guy say? Or what's this webinar guy tell me to do? Or what is this indicator tell me? There's no purpose in our trading. We're basically just followers. We've got the herd mentality, but we're not really part of the decision-making process. What we really want to do at Specialist Trading is have you become a part of the process. That's the only way to become consistent. All right, so here's what we're offering today before we go into the question and answer portion. We're offering you these two great edges, strategy number 4 and the Primo early trend detector, which is the pet D. This is probably far our most popular as well as consistent package we have at Specialist Trading. That's why we call it our Dynamic Duo Attendee Special. You see here all the things included within the course, but let me just go into detail and show you exactly what else is included and show you what other things you can apply with this. Because this also works with the E-mini S&P. I know a lot of you have been saying, well, Steve, you're just showing stocks and commodities. I don't trade those. I trade the futures markets. Okay, so do I. The majority of my trading is on the intraday trading of E-mini futures as well, and I use the same things. For example, if we go back here to December, when the market started to have some rather, very large sell-offs, a lot of people were saying, boy, how could we have taken advantage of that? That just caught me off guard. I had no idea the market was going to fall out of bed like that. Well, if you use our tools, most of our students were well prepared for what happened at the beginning of the year and at the end of December. Because as you see here in this 60-minute chart, where was the majority of price on an hourly time frame compared to the 50-period moving average? Price was below, right? So there's no reason we would ever be long on an hourly basis in this particular scenario. And there were 2 sell signals that were generated, okay? Now, if you had strategy number 4, that's okay. That's a very good and very popular strategy, and you have a certain level of consistency. But once you apply the pet D, you've even increased that consistency because it allows you to confirm those trades. And both of those sell signals were confirmed to go short. And as we see here later on, coming into the middle of December, that would have generated 60 points in your favor in 2 days. Now, once again, we're not saying that every trader would have held out for 60 points, but that's how much you had to work with. That's where you have that consistency because you know you have something that is going to generate gains in your favor, in your direction. Now, going later on to the end of the month and the end of December, we see here on a 10-minute time frame. Strategy number 4 is generating 2 buy signals. The chart opened up above the 50-period moving average, and our overall trend is now up. Even on a 10-minute time frame, the same concept applies. So it wouldn't matter if the daily time frame was below the 50-period moving average. We don't care. Why overcomplicate your trading by looking at two time frames of the same chart? In my opinion, it's silly because I've seen no level of consistency in that type of trading, okay, that technique. I only suggest that my students just focus on the time frame you're trading. So if you're looking at a 10-minute time frame, such as we have right here, that's the only one you're concerned with. Don't worry about what the hourly is doing or the daily bars are doing, because that, in my opinion, that only will keep you out of a lot of really profitable trades. So as we see here, we had two buy signals generated, but we want to confirm them. So we use the same exact techniques I just shared with you for stocks. We had the PET D, and they've been green for a long time, all of the bars. So this gives us the confidence to take the trades at the end of December. And if you were lucky enough to stay in this, that's 40 points in your favor at $2,000 per contract in the next 2 days, okay? And as you can see, many signals were generated along the way. So if you missed the first two, there's always some more being generated as well and being confirmed as well. Now it also works on the Forex markets. Same things. Nothing will change because we go into a different time frame and a different market. Here is a weekly chart of the Canadian dollar. Where is price in relation to the 50-period moving average? Price is above. So that's all we're concerned about. We have the overall trend is up. A buy signal was generated. The bar closed in the top 25% of its range, and it's confirmed green by the PET D. So this is a valid buy signal. This was in October of last year, and look what happened. 800 pips in just 3 months. That's roughly $8,000 per contract. Now we know that not everyone trades the Forex currency pairs on a weekly time frame, so let's go to an hourly time frame of the euro-yen. This was in January. As we can see here, 3 signals were confirmed to go short on an hourly time frame in the euro-yen. Once again, you see the significance and the power of that simple technique of applying the 50-period moving average. The only way you would have lost money would have been if you would have wanted to pick a bottom in the euro-yen. But all of our students know that if price is below the 50-period, we're only going to be sellers. So the strategy generated 3 sell signals, and once we applied the PET D, if you can see there closely, all of them were confirmed. They were all colored red. So that was roughly 350 pips in just 3 days. So if you're lucky to hold on to each and every one of those contracts, roughly just the first one would have generated about $3,500 in just 3 days. Same rules, same concept, everything is the same. Nothing changes because we're looking at a different market or a different time frame. So this is all included in the course, but we don't stop there. How about signals? Once we have worked together, yourself and I, over a time, and me as your personal mentor, and we see that you fully are starting to understand the method, we offer you educational signals, okay? Now these are sent overnight. As you can see here, this is, you'll get an email alert. This was sent just a couple of weeks ago to our stock traders that have strategy number 4. Now, you will get a list of stocks generating either buy or sell signals on the 24th for trade date the 25th. You see here that strategy number 4 generated a buy signal in SHW, okay? So if we look here, we see that the stock really wasn't giving us much clue to anything. It was oscillating below and then back above. And, you know, someone just looking at this in hindsight would say, well, Steve, there's real no direction here. I mean, we're just kind of going sideways. But the strategy met all of the 5 rules. And at the same time, if you were a little bit, you know, leery of taking the trade, well, all you have to do is add the PET D. And as we can see here, the majority of the bars, all except for 1, were colored green. So this is giving you the confidence that you're in an overall uptrend as well as a short-term uptrend. So you could have taken that trade on the 24th if you were more aggressive, or waited for the 25th. But either way, the stock went up 25 points in just 4 days. Now we know it's expensive stock, but many of our members, once again, trade options. You could have bought calls in this and had a very nice profit. So you will get educational signals just to check your work, just to make sure that you can see where the signal has been generated. But lastly, one thing that I want to share with you, it's probably one of our most overlooked uses of the PET D, is that it can also be used for long term. And I specifically want to make mention of this because we're at a very important crossroad right now with the PET D in terms of its long-term application. Here is a monthly chart of the S&P index. As we can see here, we have all the peaks and valleys. It's going back 20 years, back to 1995, okay, as we see here in the lower left-hand corner, okay? We see here how we went straight up, and then we met the dot-com crash, and then how we had a real nice, you know, bear market, and then we started to firm up again, until 2007, 2008, until the banking crisis hit. I'm sure you've all seen The Big Short. And then the market fell out of bed again. And then lastly, in 2010, we firmed up again, and we've been going higher. Now, a lot of people have been calling that we are at the beginning of a top, another top, that we've been going up for the last 6 or 7 years. It's time for us to do another 2 to 3 year sell-off, okay? There's a cycle taking place, something's happening, whatever, economically. So remember, once again, we do not care about what outside sources are saying. We don't look at interest rates. We don't look at economic news. We only listen to one thing. That's the market, the chart in front of us, what the market is telling us. And the best translator I know for telling me what the market is doing and what it wants to do is the PET-D. So all you have to do here is add the PET-D. And as we can see, for all these nice uptrends, the majority of the bars were green, and the downtrends, the majority of the bars were red. So the way we apply this with long-term scenarios is we need to see 3 consecutive bars of a different color to tell us that the trend has changed. So once again, going back to 1995, all of the bars were consistently green. We had a couple of red bars here, but remember, we need to have 3 to tell us that we're now in a downtrend. And it's a good thing we didn't take those 2 because we started to go back up. Here's 1. And then finally, at the end of 2000, we had 3 consecutive red bars, so you could have exited the market in your long-term portfolio and missed all of the dot-com crash. All right. Now, once we had 3 green bars, there's your signal to get back in 2003. And you would have been long the entire time up until the end of 2007, well before the market fell out of bed in 2008. Okay, well before anyone knew of the banking and financial crisis. And you would have been out of the market and missed this entire sell-off. Now, if you're a more aggressive trader, sure, you could have gone short or used shorting tools to be short this entire time. And then lastly, in mid-2009, we had 3 consecutive green bars, and you have been in the market ever since because we have not had 3 consecutive red bars. Sure, we had 2 at the sometime in 2015 here. Now, here's the interesting thing, all right? We have 2 red bars here. Guess what? This is January and February. I specifically have left out March. I'm not telling you what March is. And March hasn't concluded yet, so we have another 2 to 3 weeks left in March before we know what that bar is going to close at. Wouldn't you have liked to know well back here that we were going into a bear market if, in fact, we had 3 bars in a row? Or wouldn't you have liked to know that not to sell because we only had 2 red bars and that this was green and that we were going to make new highs in the next 2 years? This is the beauty of the PET-D. All of our people who are in the PET-D course will know if we're in a bear market or a bull market as according to the PET-D, long-term trend. So this is all included in our course. So I want you to ask yourself, do you think these winning edges that I've just shared with you could have helped your trading this past year? What if you had known all this, either short-term, long-term, whether you're a currency pair trader, an intraday trader, or a stock swing trader? Don't you think these things could have helped you? Remember, a year from today, I really honestly feel that you have wished you became a member of this course. So here's your chance to take advantage of that, just so that you don't look back a year from now and go, boy, this is another terrible year of losing. I think I'm going to have to probably stop trading because I'm running out of money and nothing seems to work. Here's your chance. Once again, we call this our dynamic duo. Here's our attendee special. This comes with all the rules to strategy number 4. You also get the add-on that generates the buy and sell signals. It also comes with all the rules and all the ways in which to apply the PET-D, which comes with the add-on to using the PET-D and coloring your bars either red or green. This also includes lifetime correspondence with myself. So as long as I'm alive, as long as I'm trading, you can always correspond with me and ask me anything, either concerning the PET-D and strategy 4 or just anything you may have on your mind about trading. Now, here's the discount we have. You can purchase this great program that usually runs thousands of dollars for only a small deposit of $14.95 plus $97 per month. Okay, so you can come on board for that small down payment of $14.95 plus $97 per month. Or if you would like to just simply have a lifetime access to both courses, you can do that, set up at $29.95. Now, the best thing about this is that we have payment plans scheduled. So if you want to even put a payment plan together with this, you can do so. The way you would do that would be by contacting Pro Trader Strategies. Once again, my sister site. They market and promote all of my courses. You can email them at the email address provided, or you can also call them directly if you'd like to set up a payment plan. Now, at the very bottom, you see that is the link that will take you to that sign-up page that you can become a member. Now, that is not a live link. You'll have to copy and paste that. But if you look on the chat box of the GoToWebinar column on the far right, you see that they have posted a live link. So you can click that on, and it will automatically take you there if you just want to take advantage of that discount and jump on board right now and become a student of mine in the next 5 minutes. But if you'd like to talk to someone at Pro Trader Strategies, they can help you. They can set up a payment plan. You can call them at 310-598-6677, and they can put you up with something really easy, and you can be up and running as soon as possible, okay? I'm going to leave this information up, and once again, I want to thank you for holding off on any questions because I will be opening up the question and answer box now. So thanks for holding off, and let me see what you have to say here. Let's see, Zelchko is saying, hi, Stephen, I keep using all your advices and rules, and I am consistent 6 months already. Oh, that's great. Thank you so much. This is, once again, we get this from time to time, unsolicited testimonials, and since I haven't opened up this box, thank you so much. And remember, we are not about telling traders that, hey, you're going to have enough money so that you can buy that car or take that dream vacation or even buy a home in the next 6 months. We don't believe in that. We're only trying to instill consistency in your trading. Now, whether that's, making a couple of $100s a month or maybe a couple of $1,000s a month or $20,000 a month, it doesn't matter. It's all relative to how much you trade and to what style you're trading, what strategy. The only thing we're trying to do is just get you on board that you're consistent, even if it's just a couple of dollars a month, because trust me, for all the traders I have talked to in the last nearly 40 years, most traders never achieve that consistency. Sure, they'll have a couple of good months and then they give it all away the next month. That's not a way to trade. Okay? It's more of a gambling mentality. So congratulations, Delco. I'm happy for it. Joseph asks, is there another way to confirm a setup apart from the PET D? Well, I'm sure there are different techniques and methods, but trust me, Joseph, in my tenure of trading, I have not found anything that works better than the PET D. I really haven't. It's the best tool, and I use it myself. In fact, I went long this morning on a 5-minute chart of the E-mini, and I went long because I confirmed it with the PET D. So it works in any market, any time frame. I use these myself. I wouldn't be talking about any strategy or technique that I didn't use or haven't used myself. And so I applied these myself in my own trading, and that's how much I believe in them, okay? Let's see, let me see, go down to see. I'm trying to view these questions here and hope I haven't skipped anyone. See, someone says, I have a money manager to manage my $1 million account. I trade on account of 50K just as a hobby, so I'm not struggling in trading. Would this strategy work for such a small size account of 50 to trade? Yes, it's all, there's no such, because one trader could say 50,000 is a lot. Another trader would say it's small. So it's all relative. So whether it's small or large makes no difference. The main thing is we teach you all about our money management, and basically we're not here to tell you whether it's going to work for your account size. We have no way to answer that, and we're not qualified to answer that. All we're trying to say is we have techniques that work, and you don't need a lot of money. I would say if you're going to be using this, you can probably start with as little as 5,000 if you want to, but once again, this is just a suggestion. We're not recommending or telling you what to do. All we are is an educational company. We said this in the very first 5 minutes of the segment. So we're just trying to educate you. Now it's your decision whether your account is too large or too small. That's not up for us to say, okay? Robert is asking if you can get a copy. Yes, just contact Pro Trader Strategies and they should be able to give you a copy of this if you entered late, okay? George asks, and where is your buy signal? Well, George, I don't know what you're talking about. And remember, once again, the buy signal is not generated by me. It's generated by the strategy. So it depends on what strategy you're talking about and all of the other rules incorporated. Now, I know a lot of people are saying, well, Steve, where do you exit? Where do you place your stop? Where do you enter? Well, those are all in the course. Once again, we can't give you that away. That wouldn't be fair to the people that have purchased the course. we're giving you a great deal. We're actually throwing in 2 courses roughly for about the price of 1. You know, that $14.95 special along with $97 per month is a really, really substantially discounted deal. So I would really take advantage of that because you'll get all the information provided within. Michael asked, Steve, would you ever add another moving average for further confirmation of your strategy 4? Well, Michael, here's one thing that I always tell my students. There is nothing wrong. In fact, we encourage all of our students to tinker under the hood. In other words, we want you to experiment and to add and subtract different techniques as long as they are within the standard format of the strategy. So in other words, since this uses a moving average, sure, it would be okay to add another average if you wanted to, okay? We don't recommend it, or we don't suggest it, but it's up to you. The one thing we do suggest is that you do not overcomplicate your trading, because there is a danger in adding more and more things onto your plate, because then you start to overcomplicate and you start to rely on outside sources to tell you what to do. Trading is usually very simple. It's a very simple process. It's us that make it more complicated than it has to. So don't turn adding more things into a crutch, because pretty soon you'll do what the majority of traders do. You'll start to say, well, let me add this moving average. Let me add this oscillator. Let me just see what this guy says in a trading room. Let me see what they're saying on TV. And pretty soon you're back to where you started, and you're taking away your level of consistency. Keep it simple, because consistency is rooted in simplicity. That's what I learned on the floor, and that's what turned my trading around, okay? Let's see here. This is from George. George is asking about the package, about the PET D. George, I would suggest contacting your trading consultant. He'll contact you about the PET D and the strategy number 4 package, because once again, I'm in charge of only of the educational portion. So in terms of the package costs and discounts, Proprietary Strategies handles all that. So contact your trading consultant, and they should be able to set you up with something. If you've already purchased the PET D, you can. I'm sure they're not going to make you pay for it all over again. You'll get a nice discount on that. Okay. Neil asks, what platforms you need to work this? Very good question, Neil. And let me go over the platforms that you can apply this and just about all of our strategies and techniques. This works on MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and thinkorswim users can apply, but you have to edit things slightly. In other words, what we want you to do is, because of the way thinkorswim is set up, they won't allow us to apply the PET D and strategy number 4 on their software. So what we've done is we simply have a splitter that uses that same data that you have for thinkorswim. You can still view thinkorswim at the same time, but we take a portion of that data and apply it to a free NinjaTrader platform, which we supply for you and which our tech support sets up for you. So it's probably, we have a great tech support department. We set the entire thing up for you so that you do it. It's all set up. And if you're thinkorswim, all you have to do is simply toggle back and forth onto NinjaTrader, and you can see all the setups, the PET D, strategy number 4, everything's right there, okay? So yes, Metastock, thinkorswim, and TradeStation, it can be applied. Nick asks, what percentage does the PET D give correct signals and false signals? Okay, I know this is a very common question, Nick. You can only ask that question if it is a system. In other words, a percentage of what? A percentage of stock trades? Okay, a percentage of stock trades that are traded on 10-minute charts? A percentage of stock trades that are traded on 5-minute charts? A percentage of stock trades traded on daily, weekly bars? Okay, or what if you trade the currency pairs, or what if you trade forex markets? There's 2 different variables. And plus, it's not a system. This is just a confirmation tool. So as I stated, once again, we are not a systematic company. We are first and foremost an educational company. We're not about keeping statistics. We're about providing our students with sound fundamental information that has stood the test of time. And then once we provide you with this information, I mentor you along the way and then mold it to fit your needs. Now, your needs may be entirely different from someone else's needs. In other words, we have some traders that use this combination here, this dynamic duo, only on stocks on swing trading, holding positions overnight for weeks, maybe a month. We have others that only trade it on tick charts, okay, of the forex markets. Others trade it on 5-minute charts on the futures markets. So everyone trades it differently. Some trade it conservatively, which we teach you in the course in which I mentor you. Others trade it aggressively. So there's 1,000,001 ways to trade it. There is no way, plus we don't have the manpower or the facilities to backtest and research each and every technique and style in order to come up with a statistic. At the same time, we don't believe in that because we want you to become a part of the process. As I just stated a few slides ago, it's important that you become a part of the process, and that process allows you to decide whether you want to take the trade or not. I answered an email by one of our students today that said, you know what, Steve, there was a trade that was generated, but it wasn't confirmed, but I still had a gut feeling that it was going to be a good trade because strategy number 4 will still generate profitable trades even if they're not confirmed at times. It's just about levels of consistency. So he said, I decided to take it off my gut feeling. And I said, great, because that's all that matters. You know, even if you use the PET-D as a confirmation tool, if every once in a while you just feel like, you know what, even if it wasn't confirmed, I really feel strongly about this because it's a strategy number 4. It's still got a high level of consistency. So we want you to be a part of the process. And that's what we teach you, and that's what we encourage at Specialist Trading. It's my opinion that's the only way you're going to become consistent. Okay? All right, let's see here. Let's go down. Well, we still have a few more minutes. Let's see here. Can the input periods be changed in the PET-D, and does it stay the same as you receive it? Yes, Gerald. No, it cannot be changed. It's set in its format. So we don't want it to be changed. In other words, we don't want it because then it turns into a tool that you're going to backtest and research, and you're going to format to make it curve fit whatever scenario, and we don't believe in that. It should be the same all the time. So we're using the same parameters I have looked at for the past 40 years, nearly 40 years. Okay. Now what it does is it's a color bar algorithm. Let's say you're looking at a 10-minute bar, while you are in that 10-minute bar before the bar has concluded. Not all the time, but if you are on the parameters of the formula, you may see it switch from red to green. But at the close of that bar, whether it's a 10-minute, a daily, or a monthly, that's the color it will stay. It does not repaint itself, okay? I just want you to be clear about that. So if it closes as green and then the next bar opens up, that's the color it's going to be. It will never repaint and reformat itself, okay? Alex asks, how do I apply daunting channels to MT4 as it is not included? Alex, I would contact, once again, the support. This is just the educational portion of the presentation. That is more of a tech support question. Contact your trading consultant. They can put you together with the tech support department, and they will be able to help you in that field, okay? Let me see here. Go a few more. Let's see, Robert is asking, how did you improve your 30% part of your trading based on your sense of the market? In other words, not just use the system approach, but to import your intimate knowledge of the market. In other words, you know jobs report imminent before you think you should enter a trade, so you wait until after this volatile move has occurred after jobs. Now, first of all, I don't even have any idea what the jobs report is going to be. In fact, many times, I don't even know news has come out until after the fact. The point is, in my experience, the market will tell you oftentimes in advance what it wants to do. So I'm not going to say that it's guaranteed, but many of our traders, many of our students attest to this. They say by applying our simple rules, which are in the course, some of them I can't divulge right now, but the requirements of the strategy, as well as the 50-period moving average and the PET-D, you are on the right side of the market before the news comes out. It's because the market, for all this time, we've been taught to make our decisions based off of what someone or something is telling us. But most of the time, we will know in advance if we learn how to listen to the market, but we're just never taught that. We're just only listening to outside sources. For some reason, we think that's more valid. And in my experience, it's actually the opposite. It's more valid to only concentrate on what the market is telling you. So this is what I teach you in the course. Now, whether this improves your trading by 30% or 20% or 100%, all I can say is, we can't guarantee that. We're just trying to add consistency to your trading. And most traders aren't consistent. Look at your own trading. I can almost guarantee that the majority of your losing trades, not you personally, Robert, but the people in the webinar, are because you are out of sync with that 50-period moving average. Go back and look at your last 10 or 20 trades. I can almost guarantee that the reason why you lost is because you were buying below the 50 period and selling above. If you just add that one simple tool to your trading plan, I really think you'll improve your odds for success even more. Now, how would you like to have 10 more very highly consistent rules like that? Well, we give you these in our courses, and this is what I feel really improves your odds for success. Now, do jobs reports, do earnings, do chat rooms help you? In my experience, no. All they do is they serve to confuse you. How many times has a news event come out, you perceive it to be bullish, and the market goes straight down? Okay, I'm sure you've all seen that. And vice versa. Something is terribly negative, the market goes down initially, and at the end of the day closes up making new highs. There's no consistency in that type of trading. I stopped looking at it years ago, and my trading has been better for it. Okay, I'm still here. I'm still trading, and I haven't looked at any of that. Now, if you want to, if you by all means feel that you can't cut the umbilical cord, I'm not going to tell you how to trade. But many of our traders still listen to news. But we just tell them it's not required in any way. All right, there's no way we require it or suggest it. Okay. Just time for just a few more before we have to end here. Let me see here. Will you set up Pet D on more than one platform for me, like IB and MT4? Yes. Once again, that's a question more for Proprietary Strategies, but I believe Proprietary Strategies are currently allowing you to set up the Pet D on 2 platforms with your purchase. Okay, so that's another extra bonus you had there as well. Okay, so there's a lot of great things. We're offering you 2 great edges here with high levels of consistency, and when put together for confirming your trades, you'll even increase that consistency even more. We're giving you this strategy that works in any market and any time frame, and this confirmation tool, which is its own complete course as well. We're also giving you nightly signals. Once you get a little bit of the experience below your belt, we provide you with nightly signals to let you know what to look for. You're also being able to use this for long-term implications. Wouldn't you like to know if we're in the beginning of a bear market, the way we were the last 2 or 3 times? Would you like to know if there's no bear market, if that we're most likely going to be going higher? Well, all of our Pet D members will be getting access to that tool at the end of March, because they will be able to apply that to a long-term time frame. So this is the beauty of what we're offering today. Remember, we're discounting it. It's a small lump sum for $14.95 with a small monthly payment, or you can have a $29.95 and own it entirely. But remember, this can also be financed through a payment plan. So call the good people at Proprietary Strategies. They can set it up for you. They can have everything there. Our tech support can set up for you for all the different platforms, even if you're a Thinkorswim user, and have this up and running very quickly, okay? In closing, I want to thank you so much for attending today. I hope you got something out of it. I hope you will be able to use any of the 2 tools I gave you in terms of the bars closing in the bottom or top 25% of the level, as well as the 50 period moving average. Those are great tools by themselves, okay? And I want to thank you, but more importantly, I look forward to all of you becoming students of mine and members of the Dynamic Duo Pet D Strategy number 4 course. Thank you so much. I will see you next time. Bye-bye.